How are you today? We are continuing our lessons on company accounts. We have done lesson 1, lesson 2. Now we are in lesson 3 or part 3 of company accounts. At this time, we want to be looking at a fulsome question from the income statement to the balance sheet. And I want you to join us as we proceed to complete this question as given in respect of company accounts. Just want to add at this juncture that if you like the lesson, please click below the like button and show appreciation. We are most grateful. As well, if it is the first time that you are viewing these lessons, we beg and ask of you that you will click the subscribe button, and in doing so, you will be supporting us and you will receive a notification, yes, of our next upload of lessons. So let us now get into the activity for this class. Of course, this question presented, and we are asked to do the income statement, and we're going to do so quickly. So we proceed with that process. Income statement for the year ended December 31st. And we are working with 2017. All right? All right, to the comments of our first activity now, we're going to put in our sales. And our sales figure is here, 135,486. There is no adjustment for sales return, none in the question, so we can move to less cost of goods sold. We're going to proceed to begin with our opening stock. And the opening stock figure represents this one here, 40,360. Our next move is to introduce our purchases. And our purchases figure, we are told, is 72,000. 72,360, yes? And we are also told that there is carriage inward, yes? And carriage inward is an expense. It is the cost of transporting the goods into the business. So we're going to add it here. Carriage inwards figure is indicated to be 1570. So we're going to add. All right, let's do the math. 0, is going to be 3, 8, that would be 9. And if that's 9, then we're going to have 3, and then it's going to be 7. So it is 73,930. Let's do that again. As I said over and over, with accounting, you have to ensure that you're accurate in calculation. Very important to properly calculate the business money. So 0, 0, 6, 13, yes, 8, 9, that's right, 3, good. Right, so we're right. So now we're going to add the adjusted figure, the new stock with the old stock. So there we have here, that's going to be 9. There's going to be 12 here, yes? 12. We carry 1, that is going to be 4, and this is going to be 11. So that looks to me like 114,000, yes? 290. We must now subtract the closing stock. And the closing stock figure we pick up at the bottom, which is 52,360 as well. So we must subtract. Shall we begin? So that's going to be 0. We take 6 from 9, that's going to be 3. And we're going to take 3 from 12, going to give us 9. Yes. And then 2 from 3, going to give us 1. And 5 from 11, we're going to have 6. All right, let's do again to make sure. That's 0, that's 3. We're taking 3 from 12, give us 9. 2 from 3, give us 1. 5 from 11, 6. Okay, so now this is the cost of goods sold. We're going to subtract the cost of goods sold from our sales. Shall we do the maths now? This is 6. Yes, we're taking that from that will be 5. Yes, we're taking 9 from 14 will be what now? 9 from 14 will be 5. Yes. Then that would be 4. 1 from 4, that's going to be 3. Yes. 6 from 13, and that would be 7. Right? So we're looking at 73,556 in our calculation. Right? Okay. All right, and that figure is what we call our gross or gross profit, right? Just so you can see it, I'm putting those dots. That's a gross profit. All right. Now our next action is to now take care of our regular operational expenses. So we're going to less our expenses, and we are going to just kind of view from the top to make sure we can identify all of those regular expenses. All right, so we have carriage out one. So we can take that one first. Carriage out towards figure. We're seeing that that is 1390. We can record it here, 1390. 1390. All right, so we've used that. Then we have rent. We're told that rent figure is 22,000. 22,545. And we understand in the note that there is an amount owing that is 280. So we're going to add it. So add it, add the owings. And the owings, again, we say is 280. So in our math, we are going to be adding, that's going to be 5, it's going to be 12, 7, 8, yes, 5, 12, yeah, 7, 8, 22. Good. Our next expense we are seeing is office expense. So we're going to treat with that now. Office expenses, we are told office expenses would be 49.18. And we also understand that there is an adjustment for owings. So we're going to add that owings. And that amount for owed is $190. All right, let's do the math now. Let's take down that, it'll be 8. and that will be 10. That's 10 as well. So 10 carry that will be 10, 11. That's going to be 5. Huh? I should think that's what that says, yes. Right. All right, so now that we have entered the other expenses, we have one other, which is depreciation. We're told that we have depreciation for building and we have depreciation for equipment. All right, so for building, we are told that it's 5% of the building of the cost of the asset. 5%. The cost of the building, this is it here, right? And we are going to find 5% of the $100,000. And if we do that calculation just for your observation, it would be 100,000 times 5 over 100, yes? Right? And we do that math. Now, so far, that looks to me like, let's see, that'll be 10,000, 10, that's 5,000. Yeah, 100,000, 10% of that would be, of the 100,000, 10% of that would be 10,000, yes. So it would be what now? 5,000. So the depreciation for building would be 5,000. We're also told that 20%, we're to charge 20% on the equipment, right? 20%. That would have been 45,000 times what now? 20%. All right? And that looks like 9,000. That should be 9,000. So it's going to be 9,000. Let me go back and look again. Yes? That looks to me 9,000. We like to be accurate. See, we cancel this and cancel that. Yes, we cancel this. Here we cancel this with this. We got 2 times that is going to give us 9,000. Okay, so we add these two, and that is going to give us 14,000. All right. So now that we have considered all the, no, just one, and I almost miss it right here, the director's remuneration. It is never done in the appropriation, always in the regular income statement. So we're going to do that now. The director's remuneration. And that means the director's salary, which is 9,500. All right. So our task now is to do the calculation of the total expenses. Yes, we need to find the total expenses. So let us do the calculation here, and then we proceed further. So now that we have done the calculation, we can record the total expenses, the total added up on all these items. Yes, we add them up and we get a total of 52,823. So we're going to subtract the total expenses from our gross profit, and we're looking at 20,733. All right. By virtue of our space, we are going to be removing this top part, and we're going to show the appropriation section. This is the net profit, by the way. 20,733 is our net profit. And so we're going to, all right, having done this, we're going to move now since for space situation, to go up to the top, erase this section, go up to the top, and continue to show the appropriation section. All right. Okay, now, so now that we're going to be now doing the appropriation section of the company's account. As I indicated, we're going to know, so we are shifted for space and we moved up the net profit. We are now going to be including now there is no deduction in terms of company tax. So we're corporation tax. So we're now going to be dealing with the retained profit. So we're going to add that. So we're going to add the retained profit. That is profit coming from last year after all our allocations, yes, and deductions. That is $15,286. We must add, and we should get 9, and that 10, that's going to be 11, 9, 10. Yes, that's going to be 6, and this going to be 3. So it is 36,019. All right, we're now going to take into consideration the reserves and the dividend. So let's comment. Let's. All right, reserves. All right, and we have the first is referred to as our general reserve. And we are told that the general reserve, that's the information in the note. For this year, we're adding to the general reserve $1,000. Right? And we're also told that the foreign exchange reserve yes, as that we're putting aside $800. So when we add this, we're getting 1,800. Our next move now is to deal with the dividends. So we're going to less, and less, we're going to start with now the preference. Do we have any preference here? Hold on. In the question, no. It's simply ordinary share. So we're going to less the ordinary share dividends. And the ordinary share dividend, we are told that it is 10%. We're calculating 10% of the shares. Right here, we're told right here that the authorized share and the issued share are the same. What they're saying in this question or in this company is that the maximum amount of shares that they have to operate the business, they have also issued all of it, right? So that is why the authorized share is also the issued share, and that is $100,000, and we are to we're asked to pay the ordinary shareholders 10%. We're going to find 10% of this 100,000, and that looks to be 10,000. So that's going to be 10,000, right? Let me put in bracket here, 100,000 times 10%. Okay? And we're getting 10,000. All right, now that we have considered all of these, we are going to add them, and it's going to be 10,000. 10,000, yes? Or not, rather it is 11,000. Because when we add 008, yes, 11,800, right? So it's 11,800. We're going to subtract now the 11,800 from this figure to give us the difference. Let's go quickly. 9. This is, bring down that 1. And this is going to be 2. take one from that. Let's go again. Yes, yes. Then 2. So the 6 plus the 5, 5, 5, that would be 4, and that would be 2. So retained profit, our new retained profit now would be 24,290. Beautiful. So now that we have completed the income statement that includes the appropriation section, we must now do the balance sheet. All right, so now we're going to be continuing to complete. We're now doing the balance sheet, and we're going to start with the fixed assets. As I said some time ago, others call it non-current asset. Same concept. All right, we're starting with building. And building at cost is 100,000. And the total depreciation is that which is in the trial balance and what is in the note. So we're going to add them. We have worked out the one in the note, which was 5% of the cost, and that was 5,000. So it's 5,000 plus the item, the accumulative depreciation that is coming from the previous years. So that would have been 32 plus 5 is going to be 37. So 37,000. We're subtracting 37,000 from 100,000, and we're going to get what now? 63,000. Right? And we move now to deal with what now? Equipment. And equipment at cost. That would be equipment at cost. We have just dealt with that. Is 45,000 right here. 45,000. And we're going to do the same thing as we did before. We're going to add the depreciation, accumulative depreciation for equipment, which is 16,000, with the one we have used in the income statement from the footnote, which is 9,000. So it's 9 plus 16, right? And that is going to give us what now? 9 plus 16 will give us 25. So 25,000, and we're going to take 25,000 from 45,000, and we're going to get the book value of 20,000. All right. Now that we have treated with both, okay, we are now going to move to the current assets. The current assets, we're starting with our stock, right? Stock of goods. And the stock of goods, we're using closing stock, which is 52,360. Then we're going to be having now our debtors, which is here, 18,000. Our trade debtors. Our trade debtors is 18,910. All right. That's our trade debtors. What other items do we have to include in this fixed asset? We have debtors. We can now treat it our bank figure. The money at the bank says it is 67,023. Was it 6,000 rather? 6,000. I think I need to write it properly. 6723. So that would be here. 6723. All right. That would have treated with this item and this item. examine to see if we have any other current asset. We don't, so we're going to add the current assets. Let's do the maths now and treat with the current assets. So we have the total here of total current assets. We must now move to look at the current liabilities. Alright, so we start with our trade creditors, and that is 12. That's the one here. 12,304, and we also the proposed ordinary dividend. Proposed dividend. Yes, it is not paid over yet. It was proposed. 10% of that is 10,000, and that would be 22,304. We're subtracting this from this, and that is the total current liability from the total current asset, and we should be getting an answer of $55,689. This is what we call our net current asset. All right, we're now going to add these items together. So the total assets plus the net current assets, or what we call the working capital, that figure is $138,689. We can double line this. We don't have any items respect of long-term liabilities, so we can proceed to go to the section finance by. So our authorized share capital. As a matter of fact, they tell us that the authorized, nevertheless, for note, we're going to do that. It is authorized share capital is 100,000. All right, it's authorized the same as the issued, $100,000. We're going to be including now our reserves. And the first we're going to put in our reserve is our general reserve. For general reserve, we have 8,000, and we had calculated reserve. We're told that we're to allocate reserves. Where is it now? Yes, $1,000. So it's 1 plus 8, that'd be 9,000. And we have foreign exchange reserve, and that now we've dealt with that. Foreign exchange is 42 plus 100, and foreign exchange reserve plus 800. So we're going to add 800 to this. 42, 4,000. That's going to be 5,000. So it's going to be 5,000. Our next move is to enter the retained profit. And the retained profit is 24 219. All right, and that we're going to be adding together. Okay. Okay, so we are going to be adding all the reserves, and this total is going to be 38,000. Yes, 38,219. When we add the total reserve with the authorized share, with the capital, share capital, our total is going to be 138,219. That causes us to balance the account. And there you have it. That's the end of this exercise. Thank you very much for sharing with us, and may God bless you. Hope you have gathered much more understanding in dealing with company accounts. God bless you.